You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
All right, everybody, good morning. Going to get started a little bit early here because we only have a short time and we want to get to a bunch of fun stuff, so we'll kick the ball off a little bit early. My name is Mark Longo from the Options Insider Media Group. We do a lot of education and analysis about the world of options, produce a lot of content aimed at the options and derivative space, and as you might imagine, crypto is a growing concern for that space, so we thought we would take the opportunity here today to explore this fluid, fragmented, and highly volatile world of crypto derivatives, talk about what we have right now, talk about what's coming down the pike, and hopefully what we can all look forward to here in the future. I started my career way back in the day over there on the CBOE, like a lot of our panelists did, so I come to it from an options perspective, and I think that's what a lot of us are still holding out hope for. We'll get to that in a little bit. First, let me introduce my panel I have here to help me do all this. Next to me, of course, is Bill Ulivari. He is the principal over there at Senecal Capital Management and the CEO of Mining Rig Solutions. Bill also started his career way back in the dark days of the pits of the CBOE, trading equity and index options. These days, he's the owner and managing director of Senecal Capital Management. They're a state-registered RIA. He also is the CEO of Mining Rig Solutions. He's known these days as the blockchain advisor. So he gets to merge those worlds of blockchain and RIAs and all of that fun stuff. Next to him, of course, we have Tony Saliba. He's worn many hats in the option space over the years. These days, he's wearing the dual hats of CEO of Matrix Holding Group, as well as the CEO of Mercury Digital Assets. You probably know him from his earlier ventures, as well as the sole founder and CEO of Liquid Point, of course, a trading platform that he sold to Convergex back in the day. These days, of course, Matrix Holdings Group operates separate execution and technology businesses, focusing primarily on derivatives, and Mercury Digital Assets is a sister to that company. It's a hybrid that handles OTC, high-touch cryptocurrency execution. They have next-gen tech for sell-side order handling of spot, futures, and soon to handle options when options are available. Next to him, Julie Winkler. She is the Chief Commercial Officer over there at CME Group. She served as the CMO for since 2016. She leads the company's sales, product marketing, research, and product development, data and analytics, and digitalization functions. Easy for me to say there, Julie, and product development. Previously, she served as Senior Managing Director, Research, Product Development, and Index Services of CME since 2014, and as Managing Director for Research and Product Development since 2007. And last but not least, all the way over there on the end, we have Matt Amberson, the principal and founder over there at ORATS Options Research and Technology Services. Matt also started his career deep in the bowels of the CBOE back in the day, and he had the foresight back then. He really started ORATS to support his options trading back then. He had the foresight to hire some statistically minded individuals, put them on the floor, and develop research to aid in trading his options. ORATS is a premier analytics vendor committed to uncovering untapped alpha-generating strategies through best-of-breed quantitative research, options-related data feeds, and customized trading decision support solutions. All right, we got a great crew and a lot to get to, not a lot of time to get to it. So let's just kick things off right now. Obviously, the crypto space, very fluid, ever evolving. I'm sure something's breaking right now as we're speaking. So we're just going to give you the snapshot of how it exists today. Obviously, for a lot of people here in the Chicago-based crypto community, the crypto boom, the crypto craze really hit home for a lot of people when the listed derivatives were launched last year. We had the CBOE listing their product, their listed Bitcoin future on the 10th of December. We had CME following suit on the 17th of December. We have CME here, Julie, to represent that. So Julie will give you pride of place here to kick things off. Give us an overview of CME's process, what led you guys to the dark side of crypto, and what are your thoughts right now on the general state of crypto derivatives?
Sure, thank you. Well, I wouldn't call it the dark side. I think it's the fun side of crypto. I'd say at CME, it really happened quite a few years ago, and it's probably one of the most unique products that we have ever worked on, where typically my team, from a research and product development standpoint, is very methodically monitoring new markets. Maybe it's a new agency market, it's a new energy product. But this really all started with a very grassroots group of individuals that started to say, I think there's something here. It started well over 4 years ago. And as the market started to grow, it started to gain more attention, and started to gain more attention from senior management to say, this is something we have to keep our eyes on. And it got to the point where we said, okay, we need a specific strategy around this. And one of the things that we saw very early on was the need to have a reliable price, reliable benchmark out there. And we began looking for a partner, which we found in Crypto Facilities, and we launched the Bitcoin reference rate in November of 2016. And part of that was us just saying, this is a good way for us to kind of put ourselves into the space, and let people know this is something that we were interested in. And it was amazing how the phone started ringing from customers once we put that reference rate out, of saying, okay, maybe now, the established regulated exchange are looking at crypto assets. And so for the next year, we really spent a very focused group of time working on what this new product would look like, talking to our customers, designing that product, and that's when we introduced it in December of last year. So it's still very early days, but we're extremely happy with where things are at. We're trading about 3,500 contracts a day, so on a notional basis, that's about 30 million on a Bitcoin equivalent. So it's quite large, and something that, again, we're watching every day, and I think it's going to evolve quite a bit in the months and years to come.
Just checking, did everybody hear that? I know it's kind of loud in here, so as long as you guys can hear? Okay, good. Yeah, obviously the space is highly fragmented, and it evolves a bit once you get beyond the listed derivatives products on the regulated exchanges that we all know. I'll give you a quick rundown of some of the other derivatives landscape out there, but again, it's evolving every second. We've got Deribit, of course. They provide implied European-style options on Bitcoin. They have decent volume. They have, last time I looked at them, they were putting up about 1,000 contracts a day. Again, contracts is a bit of a misnomer in this space, because everyone's contract size is different, but it seems like they have interesting stuff. You can actually go look at the full chain, which is not a lot of houses have that. LedgerX, of course, the first federally regulated exchange and clearinghouse to list and clear Bitcoin settled swaps and options for institutions. The folks here, Level, they've announced a crypto derivative exchange called CADE that's going to use the Ethereum blockchain. That's coming up, probably set to go live, I believe, next month. There's TrueX. They're a New York-based firm. They're the first exchange approved by the CFTC for designated contract marketplace swaps out there in crypto. There's True Digital. They're a trading venue for crypto-based deliverables and non-deliverable forwards. They have end-of-day Bitcoin and Ether reference rates and an index they disseminate for institutions. There's the Blockchain Board of Derivatives, aka BBOD. They're a hybrid centralized and decentralized platform for Ethereum-based derivatives. They have Ethereum dollar perpetuals. Perpetuals are an interesting product out there in the space, kind of replicating a future that doesn't expire. Ethereum dollar futures. There's Bitcoin Ethereum futures on their platform, and they also offer Ripple Ethereum futures. There's BitMEX. They also have a perpetual product, as well as a Bitcoin quarterly future and a bi-quarterly future on Bitcoin. Of course, those are not available to a lot of people in the US, at least right now. And then, of course, OTC. I've been talking to a lot of firms on what they put up OTC. That gets into a whole other conversation for another day. But I was talking to some folks, I believe it was over at Acuna. They said they put up a lot of OTC for their clients. They prefer to go OTC rather than putting it up at LedgerX, because they get to avoid the $12.50 per contract fees. Also, a lot of these firms, you're putting them up on LedgerX or others, they have 100% collateralization. Different OTC firms will charge different levels. Seems like it's somewhere around 30%, so that's also attractive to a lot of firms. That's a long way around to saying the space is still very fluid, still very fragmented, still very volatile. So Bill, we'll start with you. You're our blockchain Bitcoin advisor. I'm curious, what brought you to the dark side of crypto, and what are your thoughts on the kind of evolving derivatives landscape right now in crypto?
I think what brought me to crypto was a conversation that I had with a family member who was already mining Ethereum and other cryptocurrencies. And as a floor trader, I was doing some covered call writing for my clients in their IRA accounts and 401ks, just using various very retail-based pieces of software that would give me a 1% monthly kick in yield, right? So where everybody was searching for yield, we had a zero interest rate environment, and here I had this family member saying, yeah, I'm making like 100% a month or 50% a month in cryptocurrency mining, and I thought he was absolutely out of his mind. Obviously, if it's too good to be true, it probably is. So I told him that, I'll help you build this business if you teach me how to build a rig. So in the summer of 2016, I was putting together GPU rigs. We were putting rigs together, we were mining, and son of a gun, the kid was right. I mean, the return on investment, the return on income of buying this equipment was absolutely mind-blowing. And even when you talk about it, as a matter of fact, I would bring the rate of returns down. Otherwise, I seemed like a madman because the returns, again, were somewhere between 30 and 300% on an annual basis. So we would mine Ethereum, sell it, get more equipment. Mine Ethereum, sell it, buy more equipment. So my interest was, oh my gosh, here we are in a penny or 2 penny wide market in like Intel, Microsoft, the big names in the option world. We used to joke around that we had the only non-for-profit trading group in terms of edge, because you run this theoretical value and you have to quote on both sides of that. And there was virtually no edge, as anybody will tell you, in the options world, right? We just saw that compression. So here I felt this was a whole new world of getting a little bit of yield in what is otherwise a tough place to achieve that. So once I learned about cryptocurrencies and Ethereum, I decided to pivot my business where I think I fit in as a small investment advisor, as a state registered advisor. It can't be maintaining custody of crypto. It has to be done more on the exchange related side. So which companies are embracing blockchain, right? It's IBM and Cisco, Accenture, JP Morgan, despite what Jamie Dimon says. That's where I want to pivot my business, because most of my clients are between 55 and 70. I'm managing their IRA account, their 401k. Are they going to allow me to buy a 10 or 15% position in EOS or some other crypto? I don't think so. So I have to be much more careful. I'm kind of like on the bottom of the chain on the retail side, because they're freaking out over sell to open, buy to close, puts, calls, exercise assignment. Warren Buffett, derivatives is weapons of mass destruction. So I have a problem with perception in this world. So
you're bringing them derivatives, which are terrifying, and you're bringing them crypto, which is also terrifying. So I can imagine that 70-year-old is running, screaming out of your office saying, no, thank you, but no thanks, sir. But you're emblematic of a big change we're seeing going on here in Chicago as representative of this event and legions of others. There has been this very experienced derivatives trading community here that, for lack of a better term, has been waiting for the next thing, been waiting for the next step. The current markets they were trading had been squeezed to death, taxed to death, regulated to death, and there was no edge there anymore for experienced professionals. And now all of a sudden crypto lands in Chicago like a bomb, particularly over the last few years. And we've seen so many groups, you're emblematic of that, professionals migrating toward that space because they see edge, they see volatility, they see an opportunity. And it's been fascinating to watch Chicago becoming now this trading mecca for crypto, and we'll get into all that in a bit. Tony, same question for you, just a little bit of an aside here. Tony was in my studio, I don't know, probably like 4 or 5 months ago, talking about some of his new ventures on our network, and I joked with him at the time. I said, Tony, this is probably like January or February, and everyone was still fully in the crypto craze. I said, Tony, I think I'm legally obligated, I have to ask you about crypto. And it was kind of a joke, and his eyes went super wide, and he proceeded to talk for about 20 minutes about all things crypto. So long story short, Tony is knee-deep in the crypto space. So Tony, what brought you to the dark side of crypto derivatives? It's not like you don't have enough going on.
In 2009, our research, head of research started writing about Bitcoin, and I just read everything that he wrote anyways. So for about 6 or 9 months, I was completely engrossed in this new potential asset class. And then sometime late in 2010, I figured I had it down, and I just left it behind till the CME and the CBOE started talking about it in late 2016. So our main business is options execution platforms. And the corollary is so strong between what can be done in liquid cryptocurrency like Bitcoin and listed equities or other commodities, that it was a natural for us to get into it last year, build out a system for institutional brokers for the most part, and deliver workflow automation. So for the last, we launched Mercury at the end of last year, and for the last 9 months or so, we've been executing OTC block trades and connecting to some of the groups that you mentioned. TrueMax and Hedge is another one, SJMX. We're working with Legacy, mostly venues for fulfillment, okay? And what our algos do, as soon as they become more standardized, we will be able to do cash and carry with the futures, and we have a whole options platform for Bitcoin already.
Matt, same question for you. You kind of came from the same world a lot of us did, you know, deep in the options trading world, and you too have been lured to the dark side of crypto. I think I heard a rumor you were even selling some land in Bitcoin out in California or something along those lines. So Matt, what brought you into the crypto fold, sir? And what are your thoughts on the kind of current derivatives landscape we have right now?
Yeah, thanks for the plug, Mark.
If you're looking to buy a house in Bitcoin in California, Matt's the guy to talk to.
Yeah, so I found out about Bitcoin just a little bit after Tony did. In 2010, I was speaking about individually led learning, educational type topics at a Libertopia convention, and there were these very excited gentlemen talking about Bitcoin, and they tried.
That's where you learned about crypto in 2010 at a conference like
They
this.
tried to explain to me, and you know, this is why Tony is such a great entrepreneur. I was very skeptical, and Tony ate it up. So I mean, I think that's the difference between us, Tony. And I was like, I don't get this. Like, why wouldn't anyone just go out and make another coin? And so it took me a while. And then my technology team from my option research firm came to me and said, hey, let's mine some Bitcoin. And this is where I'm different from Bill. I looked at all the numbers and I go, this is just an energy arb. You're not really bringing anything to the table. There's no, you know, the algorithms that they give you, at least with Bitcoin, there wasn't any creativity there. So all you're doing is you're building computers and you're arbing energy. So I turned that down. So apparently I missed a big return there. And they said, but yeah, Bitcoin's going to go up. Well, I go, why don't we just buy Bitcoin? So I made one good choice. I bought some Bitcoin, and I kept selling it because, you know, I'm a trader. I'm not an investor. And so I think I've made every mistake possible in Bitcoin. They fed it to me in 2010, but here I am, and my option firm is very excited about producing the research when these options finally come. So that's my sad story, Mark.
When the options finally come, that's kind of the $1 million question. So let's get to that. Before we answer that really quickly, I'm going to put Julie on the hot seat in a second as our CME rep. But we thought we'd ask our audience this week too. On our network, we said, you know, the crypto derivative space is evolving. Which products would you like to see next? We gave them 4 choices. We gave them Bitcoin options, we gave them Ether options or futures, Ripple options or futures, and Litecoin options and futures. And I think you probably can guess how it broke down. About 72% said they wanted Bitcoin options, 15% Ether, and then 8% for Ripple and 5% for Litecoin. So pretty much right by market cap is kind of how the vote broke down. So Julie, all this a long way around. I'm going to put you on the hot seat. People were asking me even before the panel started, when are we going to get options? So I put it to you, Julie. When are we going to finally have Bitcoin options to trade?
Well, we're doing much like what you're doing, Mark, surveying the marketplace, and all of our product launches are driven by customer demand. From our perspective, and being at this over 170 years, we really have to see a good amount of stability in that underlying futures market to develop. So while we're certainly excited with 3,500 contracts out there, what you have to see is, you know, those futures being, you know, more stable, continuing open interest to grow, because from all of our research, it really suggests that price history and having some good lengthy price history as well is a key determinant of having a successful options contract, which is really what we want to ensure happens out of the gate. So It is definitely something on our radar screen, something that we're actively, talking to the marketplace about, but don't think we'll see anything too soon.
We had a lot of wagers on our network back at the beginning of the year. I fell into the Q2 camp. Clearly, I was wrong. Is any hope maybe for 2018, you think? Can you give us any sort of ballpark, or you think beyond that even?
I think at this point, while volume in the futures is still continuing to grow, probably not at that level where we would, see something this year. But it's, we wouldn't necessarily predict or turn down anything in the future, so something we'll keep our eye on.
Of course, this point last year, who thought we would have a future at CME at this point? So,
Exactly.
things change sometimes on a dime. Let's move on to kind of what we're bringing to the table. Why are we even talking about this stuff? What do derivatives bring to the crypto space? It's interesting. Derivatives for a long time have always been kind of tarred with this brush of being very risky, risk additive instruments. There's a reason why we don't call it the derivatives insider. Nobody would tune in. It terrifies people. And so, yet there still is that conflation going on out there. If you go look around in the crypto space and look at some of the research and some of the analysis being done on the crypto derivative space, there still are a lot of people kind of painting it as these two brushes. They say crypto is an extremely risky asset class. Derivatives are viewed as risk additive instruments. Putting these two things together is like adding oil to the fire, like fuel to the flame. So a lot of people out there who still have, I was joking about your 70-year-old running out of the room, but that's not exactly a joke these days. So Matt, you guys have all the data, you have all the numbers. What are we doing here? What do crypto derivatives even bring to the table? Why should we be bringing more of these things in?
Well, a lot of our customers are using options for protection. So especially with the markets at where they are, they're looking at, is it feasible to protect, to buy insurance for our market cap that we have invested? Same thing applies to Bitcoin. A lot of these guys have positions in Bitcoin that don't necessarily want to have it just a long Bitcoin. They could have some protection on the downside. They could have a feeling about, it would have been nice when it was at 19,000 to be able to buy some puts, maybe sell some calls. So you could create some income by selling some calls. The volatility, at least in some of these second level exchanges, I would call them, that you can see out there is quite high. There's quite a bit of income that you could produce, but then again, that would make the puts cost a lot more. So, similar with my clients, it's just to create an investment pattern of returns that match your objectives and what you want to happen with your Bitcoin market.
Tony, same question for you. Why should we be gung-ho and excited about bringing more, more derivatives to the space? Why shouldn't we just sit there with, the old Bitcoin, all the coins, and forget about adding these extra instruments?
Well, being an options trader, I think any asset class is incomplete without derivatives. I think you need a full complement of futures and options to really cement a asset class in terms of the risk landscape. The exchanges or the venues you mentioned that are listing derivatives today, I've been a regulated guy for 40 years or whatever, and I would definitely wait till one of the regulated exchanges, either CME or CBOE or one of the other ones, list the options product. From the SEC side, the OCC, allows for a very safe product for the end user. So, irrespective of what the underlying is doing, for instance, in 1992 when we formulated VIX, who knew that it would be the product that it is? So the fact that crypto purists want to keep it decentralized and off the grid, if you will, is not that important for the options complexes to function very properly. The exchanges would have that, there's plenty of market making entities that would work with the exchanges for the settlement, cash settlement options, and then the options complex would give to different trading strategies, as Matt said, for protection. Who wouldn't want to sell, puts on Bitcoin if they're trading at a 300 volatility, and so on and so forth. So you have the chance to be in the light, if you will, on the derivatives complex, while still leaving the unregulated Bitcoin, Ethereum, and if any others make it through, cryptocurrency out there in sort of the, wild, wild west, if you will.
Still is the wild, wild west. Bill, obviously there's a lot of benefits to bringing more listed derivatives to the table. And obviously people complain right now about crypto being very fragmented. The market's not very liquid as a result. Derivatives on those products can help that. Volatility, it's funny, the volatility of Bitcoin, Matt kind of alluded to it earlier, it's become a running joke. I was watching the show Silicon Valley the other day. There's an entire episode where Bitcoin volatility is the underlying joke of the episode. It's a character who's mining Bitcoin, and he has his machine set to play death metal whenever the price of Bitcoin falls below the threshold that it's worth mining. And so the joke was it was going off every 5 minutes and terrifying everyone in the office. And the underlying theme was they kept saying Bitcoin's very volatile. So it's reached that level of public perception that Bitcoin is this extremely volatile instrument. And I know Matt has some data on that in a little bit. So obviously there's a lot derivatives can bring to bear here. Why should we be bringing more of these to the table?
No, I think, again, I think we have to trust the exchanges in some respects to being responsive to, what clients are looking for. I mean, when the OEX kit first came out in 1983, I was like, well, who needs an OEX? Like, why? We have IBM, we have General Motors, we have Eastman Kodak. What do we need the OEX for? And we had expirations every 3 months. And then we went to monthly expiration. I'm like, what a stupid idea. Like, all these commissions I got to spend, why do I want a monthly expiration? And then we went to weeklies, and we're like, so the exchanges really do a wonderful job of responding to client demand. And I think we need this because we are really have invented, or what has been invented is a new asset class. I want this in IRA accounts. I want this in 401k accounts. I want small business plans to own this because we have a new asset class that's outside the system in some respects right now. We have a 33 PE ratio. We have 10-year yields at 2.9. We have 30-year yields at 3%. We have negative interest rate bonds, sovereign wealth funds. It's almost like mathematically impossible to make money with a negative yield bond. I mean, we have all these risky assets out there. So from my perspective, if I have to give the same disclaimer to a Vanguard fund at 2 basis points, or the same disclaimer to Bitcoin ETF, God willing, when that comes, I mean, we need to have this in portfolios. I really believe it. That's why we need to care, but from my perspective, until it gets to the TD Ameritrades and E-Trade and Fidelity, that's easy to execute cross-platform and be able to manage it without taking custody as an advisor, that to me is when we're going to reach the pinnacle of adoption by mainstream investors.
Yeah, obviously I think we'd all here would like to see a healthy ecosystem of it. We obviously don't have that yet, so there are obviously a number of reasons why. I'm sure you've all been looking at the headlines of late. Number one, I think chief amongst those obstacles these days seems to be regulation. The SEC, not exactly a fan, it seems like, of crypto. At the very least, they're pumping the brakes quite a bit. We just saw the Winkler ETF get rejected recently. Now a number of subsequent filings also got rejected. The SEC said that those applications, saying even though they were based on the listed futures products, said the listed products right now are not of sufficient size to provide enough information about the identity of market participants on unregulated spot derivatives markets, where a substantial majority of trading occurs. So saying still the lion's share of the paper is going up outside of those products, so we won't approve an ETF. So you have this kind of weird catch-22 we're in right now, where an ETF would obviously help drive volume to the futures, yet they won't approve the ETF without more volume in the futures. So we're kind of in a weird thing. There is a little bit of a ray of light. There was one commissioner who dissented, and she asked for a review of that. Doesn't seem like it's going to go anywhere, but at least it does show there maybe is a ray of light over there at the SEC. Another big obstacle, Tony, you alluded to it, Matt, you alluded to it as well, is kind of these dueling mindsets of, crypto was born, as you mentioned, Libertopia, was born in the kind of tech libertarian anarchist side, and now it's being brought into this, what I've seen termed online, the legacy financial industry. So this highly regulated business, and these two mindsets don't always dovetail. So it's kind of a bit of a square peg in a round hole. So there's a lot of different challenges. Maybe Matt, we'll start with you, good on the table. What are some of the challenges you're seeing out there? I know you had some good thoughts on what the Ethereum founder thinks as well about the products, and then maybe what we can do about it.
Yeah, when I graduated from graduate school, when I was a young man, I wanted to go to the freest market and compete there. And I went to the SIBO. Now I think that market is in the cryptos. And there is a dichotomy, right? There are the people that are the hardcore anarchists that don't want to be regulated or don't want the Bitcoin and the legacy financial systems, and then you have traders and registered investment advisors, people that are trying to get people interested in Bitcoin, interested in cryptos, and that has to marry some way. And I actually think that there can be common ground between those two types of groups. Finding that is going to be a challenge, and probably take too much time for us to discuss, but maybe we could take a few swipes at it, Mark.
That could be a whole other session, the merging of the two mindsets. I think if it's going to happen, it's probably going to happen here in Chicago. So we'll see. That's already starting to kind of come to fruition now. Julie, you guys obviously are dealing with this every day. What are some of the obstacles you guys are encountering over there at CME to pushing out more crypto derivatives, and what are you guys doing to try to overcome those?
The big thing that's needed, and everybody up on this panel is involved in this every day, is just more education on this space. As we've been out there, particularly talking to institutional investors, say, even just a year ago, they didn't even want to have a conversation about it, and then now they start to look at it, and they see how uncorrelated it is with everything else in their portfolio, and literally within the last 9-12 months, there's just been so much more interest. So there's now, just this year, over 90 new funds that are just crypto-related funds, managing about $7 billion in US dollar assets. So that number still needs to grow, I would say, quite a bit, but this year is already on pace that more funds were launched than last year. So that interest is there, educating them, I think getting a sound custodian service out there that people can really trust. This is a unique asset. It is not like delivering soybeans down the Mississippi River or U.S. Treasury bonds. It requires some unique things. Firms are still hesitant to want to be able to actually hold crypto on behalf of clients in a custodian relationship. And so getting that part of the infrastructure is a key part of it, as well as just educating people about how these markets work. I think the big misnomer is that people believe these assets are more risky as we compare things and bring a high degree of risk management to this area. Whether it's emerging market currencies or even energy contracts in the power space, far more volatile on a day-to-day basis than what we see with crypto. So I think you just have to put everything in perspective and don't necessarily believe everything that you read, and get some good information out there.
You mentioned the institutional issues. Tony, this is kind of a refrain we hear quite often in the crypto space. Crypto is not ready for prime time. It's not ready for institutions. The size isn't there. It's too liquid. The custody issues, she outlined many of them. This is kind of your bread and butter right now. You play in the institutional space. What are the obstacles you're really seeing there to adopting more crypto derivatives, and what are you guys doing over there at Mercury to try to overcome them?
So Julie touched on a few of the big ones, which I think the main one is custody issues, all right? A lot of people say, well, it's one thing if I lose money in an investment because I was wrong. It's another thing if I'm hacked and it's stolen from me. All right, so this is a perfect intersection between the last two topics, Mark, in that if you're trading listed derivatives on, pick your favorite digital asset, someone could be hacked and lose their Bitcoin or Ether or whichever you choose, and still wouldn't impact you. So that's sort of the nexus. I think it's a tractor beam. What The institutions are scrambling today to ready themselves, and I'm talking about the big boys, that they have a public persona that says, you know, keep using our existing products while they're scrambling in the background to have teams addressing the real customer needs. What the boom in the last 2 or 3 years in the digital asset space, it's the reverse of the dot-com bubble, where early money in 99 and 2000 was knowledgeable and, you know, smart money, if you will, and then as the bubble grew, those in flyover country got in and were left holding the bag with toys.com and all the rest. This is reversed, where those paying attention became the hodlers and got in early, and as Bitcoin became a household name, family offices, single and multifamily offices, high net worth individuals, and those who missed the boat are now being told by their managers, you need a small percentage allocated, whether it's 1 or 5% of your assets. And when you're talking about billion-dollar families, all of a sudden they need to find a way to get in. So the Goldmans and the JP Morgans and some of the Morgan Stanleys of our industry have teams figuring out how they can bridge the gap, not lose all this market share in their fiat businesses, and still address their large customers who are saying, I need to be in a digital asset that may give me some uncorrelated returns.
Bill, same question for you. You're obviously playing in the RIA space as well as in kind of the self-directed active retail side. So what are some of the challenges those spaces are seeing when it comes to adopting crypto, and what are you guys doing to do an end run around them?
That's a great question. I think I have a slightly opposite perspective, and that is nobody has ever reached out to me on LinkedIn or called me on the phone and say, hey, can you tell me a little bit more about SPY or QQQ or a Vanguard mutual fund? They give me a call, or I receive an email message saying, how do I buy crypto? How do I invest in cryptocurrencies with my retirement assets, or with my, just how do I do it? How do I set up a wallet? How do I make sure I'm not going to get ripped off? So I have inbound conversation that I've never had before as an investment advisor, and I like that. Because as an investment advisor, I know there's this misperception that we're sitting in front of a screen and we're buying and selling, we fade the opening rally and we buy before the noon balloon, but no, it's like prospecting. It's driving assets under management, and to be able to have a conversation with retail clients who want to hear what I have to say, I find that really exciting. But then again, on the other side, this adoption by investment advisors, where I can log into my platform on the institutional side and be able to allocate a 60-40 portfolio of stocks, bonds, commodity-based ETFs, and maybe 5% Bitcoin or Ethereum, that is, like I said before, that's going to be the thing that drives the greater adoption of this. In terms of liquidity, I don't know. I mean, when I was a market maker, if I had a choice between making a two-sided market in Microsoft, where the markets were a penny wide, or a one-off chain where the markets were 50 cents wide or 75 cents wide, that one always gave me the greatest P&L at the end of the year. So don't read too much into liquidity, because we kind of don't want liquidity. We need wide markets. That's what gives us the edge. And when the exchanges get it, when the traders get edge, when individual retail investors get edge, when the Goldmans and the Morgans, when they see edge in their custodial services, that's when they want this, they need it, and they're going to bring it to us.
So you don't want penny-wide crypto, at least not yet.
No penny-wide crypto.
You're not ready. I think all of the Chicago trading community is with you on that. Well, let's look at moving beyond kind of what we have now. Right now, it's completely fragmented in Bitcoin. The numbers going through the end of May, I'm sure they're pretty much the same as of today. We saw Bitcoin had about 8.3 billion in terms of notional volume, so they were far and away the market leader. The second largest, with distant second, with roughly a third of that volume, was Ethereum, about 2.7 billion, and then Ripple, a distant third with about $500 million. So that's why obviously our poll was focused on Bitcoin options. I think a lot of people here are waiting for options. Is that where we should go next, or maybe do you think it's maybe more worth our while to try to build up the ecosystem a little bit more, maybe a Ripple future or an Ethereum future? Is that an easier road to hoe, and then we come back later and bring on the options? Maybe we'll go back. Matt, we'll start with you. Where should we start? Is it all Bitcoin options all the time, or should we start broadening the futures ecosystem first, build out the underlyings, and then come back with the options?
Well, I'm going to speak to my book a little bit. I think there should be options. Bitcoin is showing itself as the store of value, whereas there are other uses for other cryptos, and there's as the price goes up, there's a lot of assets out there to protect, and there is a need for options. So I'm going to speak to that, Mark. I'm going to say do the options. Although we had a conversation earlier with a trader that wanted futures on Ethereum, but I think the options are the way to go.
Julie, where is CME headed? Obviously, a lot of interest in the options. Are you guys putting more effort into expanding the futures ecosystem first? What do you think is the appropriate next step for you guys?
Yeah, what we've been doing is we launched an Ether reference rate a couple of months ago as well. I think what we hear, there's various paths to take, whether it's options contract, more futures contract. There's quite a bit of interest, I'd say, from retail of saying, I don't necessarily know if Bitcoin is where I want my exposure, but I know that I want some exposure to crypto, so maybe it's a larger index-based product of some sort. So I'd say all of those are on the table, and I think we've mentioned it here today, just getting more products out there, ETFs as well, I think are going to be a welcome addition so that people have choices. We all know in developed markets that more products means arb between those products, and they all grow together.
So no preference as to where, as long as we start getting more. Tony, I think where your head is lying, but where do you think we should go next here for crypto derivatives?
So the most important entity in the ecosystem, in my opinion, is the market maker. And if you list, I say we need to stay vertical and list the whole thing in Bitcoin first before you broaden out, and with the exception possibly of a strong Bitcoin index, all right? Because the market making capital and capabilities then gets diluted, and you'll have all of these dark screens, if you will, on options that you're not going to satisfy the customer demand. So I say go with Bitcoin, get it out there, get the options both on the futures and then listed side on a spot basis, and build a lot of liquidity in that, and then build off of it.
Bill, should we go vertical like Tony says? Should we go broader, more like Julie was thinking? Where do you think we should go next?
I think we should go vertical. I believe that the Bitcoin options, Bitcoin ETF is the way to go, because like Tony said, you need to have this economic incentive of market makers in order to participate and build volume and liquidity. And for me, I see like this, in my mind, I see a sea of ant miners that are mining Bitcoin. And to me, that reminded me of the trading floor, where we had this sea of people. All these traders were spread, where risk was spread so thin that there wasn't one central point of failure. And I put this in quotation marks. So for me, Ripple and Ethereum products don't seem as exciting because they're more centralized. But then to have the exchanges come up with a Bitcoin volatility index, that's like another one-off. So we're going to see Bitcoin futures, options, ETF options, and then it's going to be the trademark name of the CME and perhaps the CBOE for their own products, because what drives that innovation is maybe receiving a small royalty on every transaction that's made, and there's nothing wrong with that. It's these economic incentives that help us build this economy. So again, more vertical, although some one-off products.
We have a lot more to get to. Unfortunately, we're coming up against it here, so we're going to go back through really quickly. You get like 30 seconds to sum up all of your closing thoughts on crypto derivatives. No pressure. Bill, start with you. 30 seconds, go.
It's talking about crypto today is like talking about streaming Netflix in 1992 when we were still connecting to our 24K baud modems and things. So just hang loose, be patient, and we're going to see this evolution unwind in front of our faces that is going to be absolutely amazing and drive, I think, a lot of fun trading activity and profitability.
Tony, same question for you.
I'll go back to 78. It's like talking about having puts on all of the securities we're trading. So it's coming out of the dark into the light, and it's just a matter of time. It's going to happen faster than you think.
78, before 90% of the crypto audience was born. Julie, same question for you.
I think it's still very early days, but what I would encourage people to do is to get involved. And I think, as we've talked a little bit about today, there's some ways that you can do that with a regulated marketplace, such as CME and CBOE, where you can find price discovery, where you can have risk management, and you have that safety and soundness of a futures market. And try it out. I'm sure many of you are trading cash Bitcoin today. See what the futures are, and then I think that will only help build the liquidity and hopefully bring new products in the future.
Matt, you get the final word, sir.
Frederic Bastiat said there's the seen and there's the unseen. We're very early days, and I think that this whole crypto revolution is really going to bring some great things to our economy and society. I think it's going to make people be more responsible. Like when I say people, governments and fiat, as Tony says, fiat is just government-backed currency. So my hope is that we're all participating in a very important event here. It's great to see all these people come out for this. When I first heard about it, I thought this would be a crazy thing that I wouldn't see in my lifetime, but it's come up pretty quick, Mark.
Yeah, it has, and unfortunately we've come to the end of our time. If you have questions, I encourage you to come up afterwards and ask them. Meanwhile, join me and give our panel here a round of applause. Thank you, everybody. Thanks for coming out.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.